Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy. Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
The future of capital markets runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
Today on the Blockchain Report, Bitcoin is trading around 110K, and it might be because September has a history of wrecking BTC, but Powell's hinting at rate cuts and traders are already calling it Uptober. In the UAE, you can now buy a mansion with Bitcoin, proving that magic internet money finally buys more than a Lambo. It buys you the driveway too. And Bitcoin ETFs are closing in on gold with $160 billion under management, while gold is still bragging about surviving the plague. All that and more right now in today's show. Let's go. Good morning, my Bitcoin believers, and welcome back to another episode of the Blockchain Report. I'm Hank Hudson, broadcasting to you live from the land of overpriced lattes and underpriced tech stocks, San Francisco, California. Now, before we dive into today's circus of charts, ETFs, and everyone's favorite game of Will the Fed Ruin My Life, do me and yourselves a favor and smash that like button the way Jerome Powell smashes the economy every time he opens his mouth. And don't forget to follow RoxomTV and me at Hank at RoxomTV, because even Bitcoin needs a wingman. All right, let's sort out the diamond hands from the clammy palms, the bulls from the bagged and tagged, and figure out who's winning the liquidity lottery in this morning's market rundown. Let's go. All right, we're back. Here we go. Right now, Bitcoin this morning, we were at 110 earlier. We have dropped back down between that 109 level. If you remember, we were talking with our resident chart shark and crypto wunderkind Luca Picano yesterday. He says it'd be nice if we could close out this week around that 114 mark. So that's what we're looking at in case we want to see that next leg upward. We'll keep our eyes posted on that. Ethereum down about 2.5% this morning, still hovering pretty strong around that $4,400 level. And Solana, big gainer yesterday, big loser today, down about 3% to about 205. In TradFi, we got the Dow Jones currently sitting around 45,400-ish. It's up about 0.4% this morning. The S&P 5 up about 0.3%. The NASDAQ chilling right at around 21,500, 600 area. And MicroStrategy, as we know, whatever Bitcoin does, it tends to mirror. Right now, it is down almost 2.5%, 3% this morning to 321 a share. We got a lot to cover this morning in our bull run, so let's get to it. Run the stinger. All right, welcome back for this morning's bull run, where we go over the top stories of the day. And today we will be joined by one of my favorite guests in the whole wide world, Joe Epple from Xapo Bank, to help us break it all down. Joe, are you with me, my friend? Can you hear me this morning?
I can hear you loud and clear, Hank. Pleasure to be here.
There he is. Oh, good to see you, Joe. How's everything on your end?
Everything's looking pretty good. I've just come back from a good 2-week break, refreshed and ready to, expand the world of Bitcoin dominance.
That's what I like to hear. All right, well, I'm going to give you a quick 2-minute break, and we'll be right back with you to chat about this first story. So stay put, all right? Okay, so it is September, as we are all aware, which means for Bitcoin, usually the Grim Reaper is nearby sharpening his scythe. See, across the last 12 years, Bitcoin September returns averaged 3.77%. That's the worst month of the year. 6 straight years of losses from 2017 through 2022 turned red September into less of a statistic and more of a reoccurring nightmare. The hits came from everywhere, really. In September of 2017, China banned ICOs, South Korea piled on later that month, and suddenly every degenerate token sale was as illegal as a North Korean McDonald's. By 2018, Goldman Sachs abandoned its crypto desk, a story later labeled fake news, but not before Bitcoin had already plunged below $7,000. In fact, if you take a look at this chart we have here on my left, you can see red. The streets run red with blood in September. It's not a great looking month, but the last 2 years have seemingly proved otherwise, as we have seen gains during the month of September. But as you can see, from 2017 through 2022, there was blood on the street. So it wasn't looking good, but hopefully that was old news and we're in a different time now. Because, well, remember back in 2019 when Bak's long-hyped Bitcoin futures launched with all the excitement of a high school AV club dance, volumes were weak, the debut was called a flop, and Bitcoin cratered from near 10,000 to below 8,000 in just a matter of 3 days. By September of 2020, capital rotated into Ether during DeFi summer. In 2021, China swung its ban hammer again, outlawing mining and trading completely. And in 2022, the Terra Luna collapse had already left smoking craters in portfolios before the Fed added a 0.75% rate hike in September to kind of finish the job. Then 2023 happened. The skies cleared. A federal appeals court smacked the SEC for being arbitrary and capricious and rejecting Grayscale's ETF bid, which pumped confidence back into Bitcoin and gave us the first green September in years, up about 4%. 2024, it didn't just break the curse, it threw it in the shredder. Bitcoin clocked its best September ever last year, up nearly 7.5%. Spot ETFs were approved, daily trading volume was in the billions, the Fed cut rates, Now it's 2025 and the stage is set yet again. ETFs are sucking up coins like ShopVax. Companies are adopting Bitcoin treasuries just to survive. Powell, in his latest Jackson Hole speech before retirement, swapped out his trademark pain warnings for something softer, finally realizing maybe threatening households every year isn't a winning PR strategy. The Fed meets again later this month, and a rate cut is widely expected. Historically, liquidity go up tends to rhyme with Bitcoin go up, so we'll see how that all plays out. We're bringing Joe back. Joe, September has historically been Bitcoin's version of allergy season, constant pain and regret. Do you think this year's setup with ETF demand and a potential Fed cut is finally enough for us to break the September curse? What do you think?
I sincerely hope so. I mean, I have a mixed relationship with all of these bloody Septembers. It's my birth month, so I take it a bit personally. But besides that, I think we're in a completely different environment than we were in the previous Septembers. We are, post COVID pandemic, and generally with the Fed looking a little bit more dovish and institutional demand up, and some of the best Bitcoin prices we've seen ever. I'm hoping that we do see a continuation of the newly established not so red September that happened in the last couple of cycles. But only time will tell.
That's right. I mean, we saw it was like 5 years in a row September was terrible. Right now we're on 2. If we hit 3 in a row, then I think we might be calling September something very different next year. 3 is a streak where I come from. That is often known as the turkey, like in bowling. We'll see if it plays out that way, though. With that being said, of course, we are eagerly awaiting these alleged rate cuts from Jerome Powell. Do you think that would flip the script in a big way for Bitcoin this fall if we do, in fact, get those rate cuts? Or are we maybe setting ourselves up for another pump and dump cycle heading into October?
It's hard to tell. All I can say is, as you said, usually liquidity go up means Bitcoin price go up. And if we do see a rate cut, we will see a lot more, cheaper money available to your average consumer. And that will hopefully signal a positive result for Bitcoin. That being said, it's not just dependent on these things. The whole world, as we've learned in 2025, can turn on a dime. So let's cross fingers and hold thumbs and hope for the best. But I do think the signs are in place that we could see another good September.
Yeah, it's certainly looking like that. But as we know, for better or worse, traders love patterns, even if they're based on what seems like superstition. So do you think the Red September narrative is actually impacting the markets now, kind of like a self-fulfilling prophecy? Or is it just all noise until liquidity flows decide the outcome?
It's a tough one. I mean, I think, as you said, not only traders but humans love a pattern and love to mimic these. I do think with some of the fundamentals that we're seeing, the slightly below average jobs report in the US, that does indicate likely, hopefully at least, a bit more pressure on the Fed to cut. And I think trends are one thing and patterns are one thing, but if the fundamentals have changed and if we do see the building blocks for people having more money at their disposal and an increased interest in Bitcoin, maybe we'll break that pattern and form a new one. We'll have to think of a catchy phrase for September, considering we already have October. But, we can worry about that at the end of the month. We still have time.
Yeah, absolutely. I'm really hoping we get to think of something new if, in fact, we do have a good September month. But it is always interesting to me, like the psychology element involved in this, right? Like, is this just a self-fulfilling prophecy? People are like, oh, we know September is traditionally bad. So I wonder if people are actually pulling funds out of, the market because of that. I don't know. It's human psychology. It's always so interesting to me. All right, stay tuned, Joe. We're going to go over this next story. We'll be right back with you here because businesses in 2025 are done pretending. According to River, companies are plowing an average of 22% of profits straight into Bitcoin. Yes, they're profits, not fun coupons, not marketing spend, but actual profits, and they're turning them into orange coin. Take a look at this graph released by River. It shows real estate firms leading the pack with nearly 15% reinvested. Hospitality, finance, and software are all throwing 8 to 10% at it. And the wildest part, even fitness studios, roofing companies, and religious nonprofits are stacking sats. Praise be! Now the collection plate now accepts Lightning. Now in total, small and medium businesses have grabbed 84,000 Bitcoin in 2025. That's about a quarter of what the giant institutional funds and corporate treasuries hold. Or in other words, while Michael Saylor hoards like a dragon, mom and pop shops are sneaking in behind him with their own little piles of gold. Most of these adopters are tiny. 75% of River's clients have 50 employees or fewer, which makes sense. If you run a 5-person yoga studio, you don't need 3 board meetings and a risk committee to buy a few Bitcoin. You just click buy and hope your students don't notice the incense budget disappeared into cold storage. Meanwhile, S&P 500 companies are still acting like Bitcoin is Voldemort. Even if a CEO wants to buy, no one wants to be the first one to stick their neck out, which is why small storage units in Rhode Island are buying sats while Fortune 500 firms are still asking if blockchain is a flavor of latte. And no, most aren't going all in. 40% of businesses are only allocating between 1 and 10%. Just 10% are throwing more than half of their income at Bitcoin, but even the tiny buys add up. Last week, a self-storage company added 0.088 BTC, that's under 10 grand worth, bringing its grand total to 0.43 Bitcoin. Not exactly MicroStrategy, but hey, it's something. We're bringing Joe back. Joe, businesses are now recycling 22% of their profits into Bitcoin. I mean, we're talking even gyms, roofers, and churches are stacking sats. Is this grassroots adoption more powerful long-term than headline-grabbing ETF flows? What do you think?
It's an interesting one. I think you need both to show market confidence, but the fact that the smaller players, the small businesses are not only investing in their profits into Bitcoin, but are seeing it as a thing that they should be doing with their money in order to hedge against inflation or hedge against whatever kind of economic uncertainty they're seeing, maybe hoping for a big payday. Could be a mix of all of these things. But I do absolutely think it is a positive thing overall. I think one of the, at Zappo Bank, we get approached by people wanting to open institutional accounts regularly. And I think one of the things that we need more of is reputable financial institutions offering secure custody solutions so that larger firms and, your S&P 500s can actually have an auditable and a really, legitimate record of their Bitcoin purchases and sales and holdings, and doing so in a completely safe and secure environment, which I know various players in the market do offer. But we need to start seeing more of that adoption from our larger financial institutions to shore up that confidence. So for now, I think this is a really positive sign. I think Bitcoin's always been for the people and for the grassroots. And it's wonderful to see people having that available to them and taking advantage of it. So for me, definitely a positive sign. But I do tend to see everything positively. Yeah. That's my, my optimistic view.
Yeah, no, totally. And we're seeing, mom and pop shops buying Bitcoin while these Fortune 500 companies we're talking about are still treating it like Voldemort. Do you think small business adoption is maybe the real Trojan horse that makes Bitcoin unavoidable for the bigger players later on?
I'd definitely like to think so. I mean, as you mentioned in your summary of River's study, the big companies, the S&P 500s, they have a huge amount of due diligence and hoops and bureaucratic steps that they have to jump through before investing in something that is still traditionally seen as a risk-on asset. And so it may be that there's a bit of a lag in terms of the larger institutions being able to officially adopt Bitcoin as part of their reserves or even just have it on their balance sheet. If we're seeing mom and pop shops doing it, though, it does show that there is a trend and that there is a demand for this outside of just your traditional consumer retailer or your average degen. And I think that's a really positive step. Again, go back a couple of years, I don't think your average mom and pop shop would have even heard of Bitcoin. And so the fact that today we're in a place where they're holding it, they're keeping it on their balance sheet, that's a really positive sign that general knowledge and awareness and availability is spreading and there is demand for it. So absolutely a positive thing, and hopefully it turns into, as you said, the Trojan horse that makes the big boys follow.
Yeah, absolutely. And to your point, yeah, mom and pop didn't even know what Bitcoin was a couple of years ago, and the fact that now some of them are actually allocating profits into Bitcoin is a really positive sign, especially when a lot of those mom and pops are boomers who aren't really used to the old technologies so much. So I'm appreciating that, it seems like the accessibility or things are becoming more accessible to them, and obviously the word is getting out there. So love to see it. Another thing that Rivers mentioned was that according to their data, it shows that most of the companies are dipping in small. They're not going all in on Bitcoin right off the jump. Do you feel like that slow, steady DCA approach from businesses is smarter than the sailor style bet the farm model, or should they should be allocating more upfront early to try to capture a lower price?
I mean, it's really about your risk approach, right? I think Saylor is definitely the outlier in the world in terms of not only the money he swings, but also the aggressiveness with which he purchases Bitcoin. A very big bet that could well pay off incredibly well. But for sure, I think as any kind of responsible financial institution or any responsible business owner would be thinking is, how can I mitigate my risk without exposing myself to a whole lot more? So I think an incremental approach makes a lot of sense. And at Sapo Bank, we are a bank that offers a range of financial services, not just Bitcoin. But that is, of course, our primary value proposition. Keep it somewhere safe, somewhere that's been doing this for many, many years. And I hope to see some mom and pop shops approaching us.
Yeah, absolutely. And what's wild is, and I found incredibly encouraging, was that apparently only 6% of Americans even know that Bitcoin has a hard cap. And that's like the whole selling point, right? So it makes me wonder, is the real risk here not Bitcoin's volatility, but just kind of ignorance on a mass scale? And if so, how big of a catalyst will it be when mainstream finally catches on and does their research? Because I feel like that's when things always start clicking for people. It just takes a little bit of research, right?
Completely. And I mean, look, as we were discussing earlier, we love to see a pattern, right, as human beings. And once we see the larger institutions establishing a pattern of regularly purchasing Bitcoin and making it a part of their balance sheets, I do think that everyone will start to follow on and catch on, or even just be passively investing in Bitcoin without even knowing that it's part of the balance sheet of whatever S&P 500 index fund they are invested in. So definitely, I think it's also coming off of the back of a decade of FUD, right? Bitcoin has been seen as a pyramid scheme, a scam, a Ponzi, and only in the last couple of years has that narrative really started to shift from the likes of the SEC and the United States government itself. And the fact that that narrative has turned and we are starting to see positive results, I think shows that very much we are still early. And we are starting to see the positive, green shoots being reaped as a result of this turn towards Bitcoin as opposed to trying to regulate it out of existence. But let's see.
Yeah, absolutely. It seems, and not unsurprising at all, that the more information out there that comes out about Bitcoin, the more people begin to trust it as an actual asset class in and of itself. And our next story talks about that. So we're going to bring you back here in just a second, Joe. Because first, Cornell's Bitcoin Club asked 25 countries how much they trust Bitcoin. The average score, 4.67 out of 10. Basically a D+ if Bitcoin were a college freshman who skipped class to trade meme coins. Take a look at the results from the survey here. Nigeria came in first with the highest Bitcoin trust. Japan brought up the rear with the lowest score, which means Nigerians are stacking sats like their future depends on it, and in Japan, people would rather trust a vending machine that sells used underwear. Now, 10 countries even said they trust Bitcoin more than their governments. Brazil, Indonesia, Kenya, Lebanon, Nigeria, the Philippines, South Africa, Turkey, Ukraine, and Venezuela. If your national leaders are basically running the country like a bad group project, Bitcoin starts looking less like magic internet money and more like a plan A. Meanwhile, places like the UAE, China, and Saudi Arabia reported way higher trust in the government than in Bitcoin. So if you already trust rulers with your paycheck, you're not rushing to download a wallet app just yet. Across the board, people said Bitcoin is riskier than gold, real estate, or fiat. But here's the twist. 45% said it's no riskier than stocks, and 43% said it's about the same as corporate bonds. So half the world basically thinks Bitcoin is just Wall Street with a tan. When asked about Bitcoin's fraud protection, privacy, and trustworthy service providers, people mostly shrugged. Neutral answers everywhere, which is survey speak for I have no idea how this works. Please stop asking me. The final stress question was even juicier. In Turkey, India, Kenya, and South Africa, where more people admitted my finances control my life, Bitcoin adoption and trust went up. In El Salvador, Switzerland, China, and Italy, where fewer people felt financially squeezed, interest was lower. Apparently, financial pain is the best marketing campaign Bitcoin's ever had. Japan, Mexico, and Italy finished dead last in both stress and adoption. So if you're not stressed about money, you're not stacking sats, which ironically is why you might want to. Bottom line, Bitcoin's global trust rating is 4.67 because half the planet sees it as salvation and the other half is still clutching their gold bars like it's 1930. Which means Bitcoin is exactly where it's always been, the chaos option. We're bringing Joe back. Joe, this Cornell survey gave Bitcoin a global trust score of 4.67 out of 10. That's like a D+. Should we be worried that half the world still sees Bitcoin as a casino chip?
I mean, I think there's a couple of ways of looking at this, right? And I think you made the point very clearly that in parts of the world where there is a little bit less trust in one's government and one's financial system, Bitcoin sells itself. And certainly Zappo's origins with our founder Wences Casares in Argentina came out of seeing his family go through multiple financial crises in Argentina and lose all of their money and all of their savings and have to start again, not once, not twice, but 3 times. I think hindsight is often 20/20, and when you've lived through an economic crisis that devastates a nation's wealth and prosperity, something like Bitcoin really doesn't need a marketing team. I think the rest of the world has yet to potentially experience a devastating financial crisis. Not to say that 2008 wasn't terrible, but back then Bitcoin was spawned. So I think we wait and see what happens when hopefully people get a bit ahead of the curve and start to stack some sats as a hedge. But to be honest, these results do not surprise me very much. Again, considering the bad name that Bitcoin lumped into crypto as a whole has been given over the last 10, 12 years. So I do think doesn't surprise me, and I don't think it's a negative sign. I think it just shows that half the world is still a market to be tapped.
Yeah, I think that's a good point. You know, it's one of those things that I think that's kind of part of human nature. It's like we don't look for alternatives unless we really feel like our main option is broken. So it's if it's not broke, don't fix it to a lot of people, but they're just not broken enough yet. And you see in those countries, like you mentioned, Argentina and a lot of these South American nations that have crazy inflation, it's very broken apparent there. So they are more likely to look for other options when you have other parts of the world where it doesn't seem so broken yet. So they're like, we'll just chill here for a while. In fact, 10 countries trusted Bitcoin more than their governments, while you have places like Japan and Switzerland that just couldn't care less. Does this prove that Bitcoin is less about technology and more about how broken your local institutions are?
It's a great question. I think it's about both, right? I think the technology that it has created and enabled Bitcoin, which I think not too many people really fully understand or want to get into, but it's fully decentralized nature, and the fact that there isn't a central Bitcoin bank governor setting interest rates and deciding on money supply, that is the technology that makes it such an attractive alternative option to a failing local currency or economic system. So I do think it proves a point that perhaps awareness is more easily found, at least in countries that are experiencing or have experienced these situations. And I think the technology for most people is not fully understood and is neither here nor there. But what is very important for people to understand is that Bitcoin is available to you no matter where you live in the world as a means to protect your wealth from your local environment and to spend it freely, obviously within the rules and realms of the regulations that govern it. And that is what Zappo Bank was established to be, a place where anyone in the world could secure and grow their wealth so that you don't have to lose everything when your central bank governor decides to do something crazy, or your government, whatever it may be.
Yeah, absolutely. And then the survey showed that financial stress, I guess, is what tends to drive Bitcoin adoption much of the time. Is the brutal truth here that Bitcoin's best marketing campaign is in fact economic pain? And if so, does that mean adoption only accelerates as debt spirals get worse?
I think it's definitely a starting point for adoption because, as I said, I think it becomes a no-brainer when you see the alternative as a rapidly devaluing currency, being governed by an incompetent government or an incompetent central bank. I think that is why it's seeing such early adoption and such uptake in countries like Nigeria and South Africa and Turkey. I actually just recently flew through Turkey on my way back to South Africa from my break. And when you arrive at the airport, all of the walkways are sponsored by BTC Turk. The airport has BTC Bitcoin advertising all over it. I think it's definitely the easiest gateway into the world of crypto, but the world of Bitcoin specifically. But I don't think it's the only one. And I do think as we start to see global economic uncertainty become more of a reality and global politics becoming less and less certain and stable, something that is an alternative to what we already have, even if you're in a very stable country, starts to become something that you consider. And that consideration phase is where I think a lot of the more developed world is still in, where the emerging markets are very much already adopters. So I do think it's maybe not the only selling point, but certainly the obvious one that's driven a lot of the early emerging market adoption. So let's see. I think further corporate allocations on balance sheets, more ETFs, and more regulated financial institutions offering this as a service is going to make it a far more accessible and secure-looking and actually secure asset all over the world, not just in those that have felt the pain of hyperinflation.
Yeah, and kind of back to what we were talking about earlier, psychology at its most fundamental seems to be like the biggest human driver, and fear certainly being one of those, and the fear of missing out, right? So it's like people need to see the fact that they're either going to be too late to the party or that they need an alternative because their current circumstance are absolutely dire. And so it's not surprising that, that seems to be very much part of the main driver of adoption. But again, there are a lot of factors at play, like you mentioned, so, Joe, we got to let you go. Before we do, though, always appreciate having you on the show, and I'm sure plenty of our audience members do too, and they would love to learn more about you and everything you and the team over at Xapo Bank are doing. What's the best place I can send them to get more information about all the amazing products you and the team offer?
Great question. Feel free, please check us out on Twitter at Xapo Bank. We have a LinkedIn presence as well, also Xapo Bank. But Twitter, we have a great, Bitcoin Adam handling everything for us there. We post all of our upcoming Roxom appearances, as well as our own Xapo talks that we have from time to time. So follow us on Twitter or X as it's now known. Sorry, I'm still a millennial left over from the early days. And we'll keep you up to date. Best case scenario, become a Xapo Bank member, and then we will be right there on your phone, always, keeping you safe and growing your wealth.
Love it. Only place to bank your Bitcoin for my dollar, or my Bitcoin for that matter. So Joe, always a pleasure having you, and hope to see you again soon, real buddy. Thank you for your time today.
Thanks so much, Hang. Love it. See you soon.
Cheers. All right, we're going to a quick break, but when we come back, we have Blockchain Without Borders coming up. Let's see what's going on in other parts of the world. We'll have that and more when we're back. Stay tuned.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, it's time for a little blockchain without borders. Let's see what's going on in other parts of the world, because they matter too. Ukraine's parliament, well, they just gave crypto a big thumbs up and then immediately reminded everyone that governments never forget to add the word tax. The Verkhovna Rada passed the first reading of its crypto legalization and taxation bill with 246 out of 450 lawmakers in favor. The bill would slap an 18% income tax on digital asset profits plus a 5% military tax because apparently even your Bitcoin gains need to serve on the front lines. As a sweetener, the bill adds a temporary 5% tax rate on the fiat to crypto conversions for the first year. That's basically Ukraine's way of saying, we'll make it cheap to start, then we'll come for the full cut once you're hooked. The tax setup is designed to bring structure and transparency to Ukraine's booming crypto economy. The country currently ranks 8th in the world for adoption, which means Ukrainians have been stacking sats faster than most regulators can Google, "What is blockchain?" Now, but the details here aren't fully nailed down just yet. Nobody knows which agency will get to boss crypto around. The National Bank of Ukraine or the National Securities and Stock Market Commission? I don't know. Place your bets. The bankers who love fiat or the regulators who love red tape. Ukraine's been ahead of the curve in crypto anyway. It's already deep in DeFi, experimenting with digital reserves and building a reputation as one of the most crypto-friendly jurisdictions in Europe. Basically, it's trying to become the Switzerland of crypto, only with better borscht. Of course, this is just the first reading. Lawmakers like Yaroslav Zelezniak said more changes are coming before the final vote, but the direction is pretty clear. Ukraine is locking in on crypto as part of its economic framework, and unlike some countries, it's not wasting time pretending that it doesn't exist. The crypto community in Ukraine is celebrating the move, cautiously, because while legalization is cool, nobody's ever popped champagne over an 18% tax bill. Still, once finalized, Ukraine could become one of the most attractive crypto hubs in all of Europe. And in a world drowning in bad fiscal policy, that kind of clarity is worth way more than another stack of IOUs. And back in El Salvador, the first country to make Bitcoin legal tender is moving its coins around like a shell game, only this one's worth $678 million. You see, until now, the nation parked its entire Bitcoin reserve in a single address for transparency. But on Friday, the Bitcoin office announced it had split 6,274 Bitcoin into 14 new wallets, each capped at 500 coins. The official reasoning for this? Quantum computing. The fear is that one day supercomputers could use Shor's algorithm to crack the cryptography protecting Bitcoin's keys. When you spend Bitcoin, the public key is revealed, and if quantum tech ever gets good enough, hackers could snatch private keys and redirect funds before the transaction is even confirmed. To limit the damage, El Salvador has scattered its holdings across multiple addresses with a public dashboard keeping the new setup transparent. It's essentially diversification, but instead of stocks and bonds, it's 14 wallets designed to survive the Skynet timeline. Project 11 warns that 10 million plus Bitcoin addresses already have exposed public keys and could be at risk someday. BlackRock recently chimed in too, filing a warning that quantum computers could undermine the cryptography behind not only Bitcoin, but also banking, email, and basically everything we rely on to pretend that we're civilized. So yeah, the risk is theoretical, but when BlackRock starts dropping quantum doomsday into its SEC filings, people tend to take notice. Not everyone's panicking though. Tether's CEO Paulo Ardoino said Bitcoin will unlikely evolve quantum-resistant addresses, and users will have time to move funds before any real threat actually emerges. Michael Saylor has gone even further, dismissing quantum fears as marketing fluff for quantum tokens. He's argued that if anyone actually built a world-breaking quantum computer, companies like Google and Microsoft wouldn't release it because it would vaporize their own businesses right alongside of Bitcoin. His solution is pretty simple. The Bitcoin network can be upgraded. Software, hardware, the whole stack, just like governments and tech giants already do. Saylor even claimed that Bitcoin is the hardest thing in the universe to hack, while banking and communication systems are orders of magnitude weaker. So what does this all add up to? Well, El Salvador has shown it's thinking years ahead by proactively spreading out its stash. Quantum computing may or may not ever be the boogeyman people fear, but if it does show up, the first experiment will not be on Bukele's balance sheet. For now, the real headline is that El Salvador's coins are safer, the blockchain remains transparent, and Bitcoin, despite all the quantum buzzwords, is still the only monetary system preparing for sci-fi problems before they exist. And in the UAE, you can now buy your dream luxury home with Bitcoin. RAJ Properties, a publicly traded developer worth around $1.3 billion, announced that it will accept cryptocurrency for international property sales. So yeah, you can now swap digital magic internet money for an actual house in the sand. The company will accept Bitcoin, Ethereum, Tether's USDT, and other major tokens. Payments will go through fintech firm HubPay, which will handle the messy part, converting it into UAE dirhams before the money lands in RAJ's accounts. Because as modern as this all is, nobody's paying property taxes in Dogecoin. Sorry, Elon. CFO Rahul Jogani said the move is designed to attract digitally savvy investors. In his words, we're opening the door to a modern ecosystem of customers who see value in transacting with digital assets. Or in other words, RAJ Properties would like your Bitcoin, please. The developer is no small player in the space. Listed on the Abu Dhabi Securities Exchange since 2005, RAJ posted a net profit of 281 million dirhams in 2024, which is up 39% from the year before that. And in 2025, they're planning 12 new projects as part of a growth strategy that now involves taking your ETH for a penthouse. Now, this isn't just about one company either. It's part of the UAE's sprint to become a global crypto hub. Industry leaders say digital assets could be one of the country's biggest economic sectors within the next 5 years. And with Dubai and Abu Dhabi already racing to create progressive crypto frameworks, Ras Al Khaimah's move into real estate payments is another layer in the digital sandcastle. Chainalyst data, in fact, backs it up. Crypto activity in the UAE has surged across transaction sizes, with retail activity climbing more than 75% year over year as of mid-2024. So yeah, the UAE is becoming a place where your Bitcoin doesn't just get you a Lambo, it gets you the garage to park it in. All right, we're going to take a quick break, but when we're back, we're going to be doing some AIO and see what our robot friends are up to, including Taco Bell, which will be offering a new drive-thru that will be even more frustrating as you now will only talk to a robot. Can't wait! All that and more when we come back on the Blockchain Report. Stay put.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go!
All right, we're back. It's time for a little AIO. Let's see what our robot friends are up to, because apparently they've infiltrated Taco Bell as they thought it would be a good idea to replace teenagers at the drive-thru with Alexa's drunk cousin. They rolled out AI order takers at 500 locations. And according to the Wall Street Journal, the experiment went about as well as you'd expect. Creepy, glitchy, and easily trolled. Customers figured out fast that you could mess with it by ordering 18,000 cups of water. Employees jumped on Reddit to complain the bot was telling people the restaurant was out of everything except drinks and sauce packets, which, to be fair, is about 60% of Taco Bell anyway. One poor soul tried ordering a chalupa supreme with onions. The AI gave them 3 chalupas. Then, when they asked to swap meat for beans, the AI flat out refused, because apparently even robots draw the line at vegetarianism. But Taco Bell's not giving up. Their parent company, Yum Brands, already inked a deal with NVIDIA to improve its AI backbone. Because clearly the problem wasn't the idea, it was the graphics cards. And they're not alone in this fast food AI fever dream. McDonald's tried it, then quietly ditched parts of their program after the AI kept butchering people's orders. When Wendy's rolled out its own AI chatbot trained to understand JBC, it means Junior Bacon Cheeseburger, but customers mostly found it really, really creepy. White Castle brought in SoundHound for its drive-thrus, proving nothing is sacred anymore, not even sliders. The inevitable takeaway from all this? Taco Bell's own tech chief admitted that when lines are long and things get busy, it's better for humans to handle the orders. Which means we've now spent millions proving something every Taco Bell employee already knew. Don't replace Karen on the headset with Skynet. AI can generate ransomware, bomb recipes, anthrax guides, but it can't get your chalupa right just yet. Some future we got here. Victor, I want to bring you in to chat about this one. How do you feel about these AI fast food workers? I mean, it's taking people's jobs. They're not very good. Are you for it or against it?
I'm against it, but I think it'll be kind of fun just to try it out.
Yeah, I feel. Yeah, go ahead.
No, go for it.
No, I said I feel like in America we're not equipped for it. I could see like Japan doing it. Japan has those restaurants where your food rolls onto you on like a kiosk or whatever. Like in America, we're too complicated, we're too annoying, we're too entitled. We always want our meals, like changed certain ways. I don't think the robots are here for that yet.
Yeah, I mean, if the technology's not there yet, let's not do it.
Yeah,
I don't know. I mean, usually like with drive-thrus though, it's not like you spend a lot of time with the workers anyways, so I'd be okay with it if it frees them up to do other stuff,
yeah.
But yeah, I don't know. I'm conflicted about this.
I mean, in theory, you would think like automating it with AI would make it faster, but then I think about all the AI automated customer service helplines, and this doesn't seem to be a far cry from that, and those are an absolute nightmare. You're just going agent, and like, am I going to have to do that now when I'm at McDonald's?
Right. If there's an issue with your order or you're missing something, like you're going to have to do that, and it's going to cost a bigger deal. Yeah.
Right. And then when they do inevitably mess up, who do I complain to? I can't say like, usually if I rarely ever complain about anything, but if it's like a really bad waiter or, whatever worker at the drive-thru, I can at least be like, can I get your manager? Like, you're really bad. Who do I talk to?
You're going to have to...
A robot.
Yeah, you're going to have to call someone. It's like the Waymo, the driverless cars here in San Francisco. Like, when there's an issue or they crash, like, when the cops show up, it's like they have to make a phone call to Waymo.
Yeah, that's a great example. The Waymos are just screwing up everything in the streets of San Francisco. It's a fun party trick, and I get that. But, fast food is already kind of slow these days and incredibly expensive now. Like, the value add is kind of gone, It's like, I'll go to somewhere else if I want to spend $15 on a value meal.
I don't know if I missed this part of the story, but this is just the drive-thru, or they would actually be making food?
My understanding, it's the drive-through.
Okay.
The food thing, I could actually maybe see working. Like it's easy to systematize that. If it has, I feel like that would be more easily programmable. But having to communicate with people, some people can't, have weird voices or don't talk correctly, and I could see the AI having a difficult time I mean, even when I type into my phone, it's always messing up my words.
Right.
You know? I don't know. I love these futuristic things. I want to live in the Jetsons world, but we're not there yet. And realistically, quantum computing is going to ruin everything before we get there. So, damned if
Let's
we
hope
do,
not.
if we don't. Yeah, let's hope not. All right, I think we're going to take a quick break here. More Blockchain Report when we come back. More stories, and we have a special guest joining us for a fun deep dive in just a bit. So stay tuned. We'll be back right after this.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
All right, looks like we got some breaking news this morning from RoxomTV. SEC Chair Paul Atkins unveils the spring 2025 agenda focused on Bitcoin and crypto regulations. Why is this important, guys? Why? Well, it's important because the more guardrails and clarity that we have in place in this space, the more likely it is that these bigger institutions and even those mom and pop stores that we talked about earlier are going to feel comfortable investing in Bitcoin as an asset class. Remember, there's still skepticism. People are still calling it monopoly money, whatever. But we know that's not the case, and the writing is very much on the wall. Since President Donald Trump reassumed the office, he has been pushing a very pro-crypto agenda. Is part of it because it's kind of lining his own pockets? Maybe, but hey, if you're in the Bitcoin or crypto space, you can't help but know that's a good thing for you too. As we get more regulations in place and more clarity, expect a lot more money, both institutional and retail, to pile into the space. And what's interesting, if you scroll a little lower here on the Bitcoin, or the Roxom Twitter page, we have the public perception of Bitcoin from some very notable figures in 2024 and how it is now based on quotes that came directly from their lips. So let's bring that up here. I want to read a couple of these because it is pretty wild. All right, so first up here, we got Jerome Powell himself, right? Saying just a year ago, before 2024, Bitcoin is highly volatile and therefore not really useful store of value and isn't backed by anything. This was in 2021. Now, today, it's like gold, only it's virtual. It's really a competitor to gold. Quite the 180 in only a few years' time. But it doesn't stop there. Of course, now we have El Presidente Don Juan himself saying in 2019, I'm not a fan of Bitcoin and other cryptocurrencies, which are not money and whose value is highly volatile based on thin air. Now, 2025, what does he say? Together, we will make America the undisputed Bitcoin superpower, and he's calling himself the crypto president. So again, a very big about face there. Larry Fink, this is really the one that kind of did it for me. Again, 2017, Bitcoin is an index of money laundering. Now, in 2024, my opinion 5 years ago was wrong. I believe Bitcoin is legitimate. So it's time and again here, everybody, for anyone paying attention to what's going on. Everybody at first scoffs at Bitcoin. It's a bunch of BS. I don't buy it. A little bit of research is done. They see how the tides are turning, and they themselves are then jumping on board. Jamie Dimon, Bitcoin itself is a hyped up fraud. It's a pet rock. This was 2023, 2 years ago. Now he says we're going to accommodate. It's what the customer wants. So even though Jamie Dimon, yeah, that's right, Flav. Jamie Dimon is begrudgingly acquiescing to the demands of his customers because he knows you gotta go and give the people what they want, and that is into Bitcoin. Mark Cuban, 2019, I'd rather have bananas than Bitcoin. I can eat bananas. Now he just says, in 2025, I think it has more value than gold. He went from saying he'd rather have bananas to it now has more value than gold. And last but not least, we have Michael Saylor, the high priest of Bitcoin himself, was not initially a Bitcoin believer, and now he's got wings. He said Bitcoin's days are numbered. It seems like just a matter of time before it suffers the same fate as online gambling. Given this was back in 2013, so his skepticism there, a little more understandable. Today, he says Bitcoin is harder, stronger, faster, and smarter than any money that has preceded it, and that was this year. So as you can see, gang, this is an incredibly important inflection point in the history of Bitcoin. A lot of skepticism has met Bitcoin in the last 15, 16 years, but now governments are on board. We have some of the most powerful people in the monetary and financial systems jumping on the Bitcoin bandwagon. This train is going to continue to move up and to the right, but I think in a lot more slow and steady pace than we had seen previously. So in my opinion, not financial advice, but those huge 70, 80% drawdowns that we've seen in the past, I think those are things of the past. We have so much more institutional money in the space. We have governments actually putting guardrails in place for clarity for people and for businesses about Bitcoin. It is an exciting time to be here right now, boys and girls. I'm excited you are on this train with us because good things are coming. All right, so we need to take a quick break, guys. All right, we're going to take a quick break, but in just a few minutes, our featured guest of the day is going to be joining us to talk news and more. So stay tuned for that. All coming up on the Blockchain Report after this.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
Runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
All right, gang, welcome back. We're actually going to hit our deep dive in just a bit, but first, we have our guest today who's going to be joining us for our bull run. He is a builder who's helped shape Ethereum standards, powered up Filecoin's core infrastructure, and now he's leading the charge to make Bitcoin programmable at the base layer. From smart contracts to oracles to building tools that could turn Bitcoin into the backbone of global finance, he's been at the center of some of the most important shifts in Web3. Let's give a big blockchain report welcome to the CTO of TORRAM, RAJ, everybody. Welcome to the show. Me and our audience are super pumped to have you. How are you this morning? Thanks for joining us.
Good, Hank. Well, thank you for the great intro there. Appreciate you guys having me here. Really pumped to be here.
Yeah, we're super pumped to have you too, Lee. And before we get into today's news, I want to talk about you really quick. You're the CTO of TORRAM, and you've spent years building in Web3, from Ethereum to Filecoin to a lot of things. Just give us a quick rundown of your background for our audience that might not be familiar with you yet.
Sure. For me, I've been building in the space for 10 years now. I started in 2016, 17, basically was one of the first folks to build stuff on Ethereum, worked with some of the core devs back in the community. And in the last 10 years, anything that we know in crypto, whether it's DeFi, stable coins, real world asset applications, DEXs, I built, managed, touched, advised in some capacity or the other. And now I'm here bringing all that experience to Bitcoin through TORRAM.
Amazing. Well, I think it's safe to say you are familiar with the space, so we're super pumped to talk to you about some of these news stories. So just hang tight. We'll bring you back in just a second. Sound good?
Sounds good.
All right, let's do it. All right, so next, Pierre Rochard dropped the kind of mic that central bankers just hate. On one side, Jerome Powell's Fed running fractional reserve banking that pays 4.5% interest on reserves. On the other side, we have Michael Saylor's company Strategy holding over 636,000 Bitcoin, paying 10% on preferred stock and up 580% on its own balance sheet. Pierre's verdict for all of this? Well, Michael Saylor is outperforming Jerome Powell. The Fed needs to urgently buy Bitcoin. Or in other words, the nerd in the orange laser eyes is dunking on the guy with the money printer. Strategy had already boosted dividends from 9 to 10%, fueled entirely by its Bitcoin hoard. Rochard calls it full reserve banking, and compared to the Fed's 0% reserve requirement world, he's not wrong. But Powell's not touching it. He's made it clear the Fed has legal restrictions and there are no plans to change the law, which is a fancy way of saying we'll keep buying treasuries while you all YOLO into Bitcoin. Meanwhile, the market doesn't care about Powell's feelings. In August, a whale dumped over 24,000 Bitcoin, that's about $2.7 billion worth. And while price fell, it already has clawed its way back up currently to around that 110K level. Bitcoin took a punch and, well, it kept standing while Powell still fiddles with inflation math. Now, Rochard also reminded everyone to zoom out. Real evaluation of Bitcoin treasury companies, he said, should happen over 4 years minimum. The Benjamin Graham-style weighing machine horizon, if you will, which is polite code for stop whining about short-term volatility and check back when Saylor's still printing double-digit dividends. And then, of course, there's the Trump administration, pushing deregulation and openly flirting with a U.S. Bitcoin strategic reserve. Powell says no. The White House says maybe. Saylor says yes, obviously. There he is. At this point, the Fed is like the kid eating glue in the corner while the rest of the class discovers fire. We're bringing Lee in. Lee! Pierre Rochard says Michael Saylor is outperforming Jerome Powell and that the Fed needs to urgently buy Bitcoin. As someone building on Bitcoin, do you think it's inevitable that central banks will eventually add BTC to their reserves, or am I just living in fantasy land over here?
Yeah, good question, actually. Well, I wrote an article back like 6-7 years ago that Bitcoin could actually be the reserve currency of the world. And, I was just floating around some ideas back then. And that's what the world has come to today with the recent cycle, right? Perhaps Fed won't buy Bitcoin right now, today, right? But at one point, we might see that not only the US Federal Reserve, but different central banks across the world could see Bitcoin accumulation in their balance sheet. right? So it's starting off with definitely, a lot of companies, because that's like a really, it's a much more easier decision than something that a central bank can do. But over the next couple of years, we might actually see that. And I think also the central banks that take this initiative first will also result in a much more power dynamic compared to the other countries in the world. But I think it'll be very interesting to see.
Yeah, absolutely. And, it seems like things are getting more competitive, right? I mean, Strategy's dividend is now 10%, and that's backed entirely by its Bitcoin hoard. So how much does this prove Bitcoin isn't just speculation, but can actually fuel yield models that compete with TradFi?
Absolutely. I think like there's a lot of trapped liquidity in the Bitcoin right now. Like if you ask like an average user, right, how many altcoins do you own, or how many, XYZ coins you own, you may not get a yes, but you will get a yes for Bitcoin. So everybody who has even heard about crypto a bit, they see crypto through the lens of Bitcoin, right? So there's enormous trapped liquidity in the Bitcoin ecosystem. But the next question is that, okay, I have all this Bitcoin, like, what do I do with it, right? I can't necessarily do things with it. And I don't necessarily want to give up my Bitcoin because I don't want to give up my keys. And number two is that I don't necessarily want to do all this wrap things like, okay, wrap in this ecosystem, that ecosystem, and I basically lose track of it. And I think getting a native yield directly from the Bitcoin ecosystem, right, through its security model, through its decentralization, is the next frontier of applications that we'll see.
Yeah, I think you're right. The demand is clearly there. However, we do have Jerome Powell, of course, at the center of much of this, and he's insisting that the Fed is legally barred from buying Bitcoin. Do you think that legal frameworks eventually bend to reality, or will the Fed just keep stacking treasuries while the rest of the world stacks sats?
Yeah, I think like, before just 12 months ago, right, before this new Trump presidency, things were quite different in the crypto landscape. You wouldn't have heard about this massive explosion. Like Strategy was literally probably one of the key players in the space. Now you can see all these Bitcoin treasury companies popping up like mushrooms, right? And, you can see a lot of things that have happened in this space. We got through the Genius Act, a lot of stablecoin IPOs, and that's all like 12 months, which feels like a lifetime for us, but it's kind of insane. I've been in the space for 10 years and I've not seen this. So I think ultimately there will be a tipping point where, I think Fed will probably make that decision, but it's kind of hard to say right now. And it also kind of seems like, oh, will this be a reality? But you never know. That's how I will put it out.
Right. And it does, to what you mentioned Trump, right? And his administration kind of feels like will be the big tipping point of which way this will go. I mean, his administration is floating a Bitcoin strategic reserve while Powell's like, Fed can't buy Bitcoin. Right. So it begs the question, do you think politics will be the force that ultimately drags central banks into Bitcoin rather than economics alone?
Yeah, good question. I think like the way the system is architected, right? In the US, you have, certain legal frameworks where Fed has always acted in independence. And like, there is like, it has maintained its independence through like, whether it's like politics or, the kind of forgetting the actual terms, right? But I think like definitely it will shape, right? There's always like influence to it, but it's not like, you can force the Fed to do it. Fed's always concern has been through inflation and keeping inflation under control and having the right monetary policies in place. And I think that's what probably Jerome Powell is going through, like really trying to keep inflation under control. But perhaps there'll be a stage where, inflation is under control, the economy is stimulatively enough. And now it comes back to like, okay, how do we get into this massive growth stage, or also in this stage of how we can acquire hard assets into the balance sheet? And I think that will bring more flexibility to the mindset of people in the Federal Reserve. Right now, inflation is probably a top priority.
It's certainly like a challenging tightrope that I would not want to have to walk myself, right? Because it's like the U.S. seems like they're kind of bombing the dollar a little bit because there's so much debt. And if you bomb the dollar, that debt is actually not worth as much. But then there still seems to be a resistance to buying Bitcoin, which would ultimately help, but also not necessarily great for the dollar. No, I'm just glad I'm not in Jerome's seat. So good luck with that. But I think we see the way things are heading right now. And we're going to talk more about that in just a second. So hang on there, Lee. We're going to bring you back after this next story. Because Ray Dalio, billionaire founder of Bridgewater Associates and part-time doomsday narrator, is once again warning that America's ballooning debt is the financial equivalent of a ticking time bomb. In written comments to the Financial Times, Dalio said overspending is now a bigger threat to the dollar's reserve status than deregulation. Or in other words, the U.S. is running up the national tab like a drunk uncle at Applebee's, and the rest of the world is starting to notice. His actual words were, the dollar and the other reserve currency governments' bad debt situations are threatening their appeals as reserve currencies and storeholds of wealth, which is what has been contributing to the rises in gold and cryptocurrency prices. So basically, the worse governments behave, the more people pile into shiny rocks and internet coins. Dalio framed the moment as another chapter in a late-stage debt cycle, the same playbook we saw in the 30s and 40s and in the 1970s and 80s. Back then, governments spent like maniacs. Fiat currencies got weaker and investors ran to scarce assets. Fast forward to now, same circus, different clowns. He's not saying crypto will straight up replace the dollar, but he is saying Bitcoin is a legit alternative because of its limited supply. With only 21 million coins ever, it's the obvious hard money hedge against money printers running overtime. And yes, Dalio himself has admitted he holds some Bitcoin, so the billionaire warning about financial collapse is also quietly stacking Satoshis. Go figure. Dalio also poured cold water on the idea that stablecoins are the big risk. He argued that treasuries themselves are the weak link. If debt keeps piling up, treasuries lose purchasing power. Stablecoins, he said, won't blow up the system if they're properly regulated, which is convenient timing because President Trump recently signed the Genius Act, the first federal framework for stablecoins, forcing full liquid backing, audits for issuers over $50 billion, and rules for foreign issuance. Big picture here, though. Dalio says policymakers have two terrible options. Either let rates rise and risk a default crisis, or keep printing and torch the value of the dollar. Heads, you lose confidence in fiat. Tails, you lose confidence in fiat. He compared today to the late 20s and 30s, an era of debt, populism, geopolitical rivalries, and technological upheaval. Only now we're adding climate change and AI to the mix, which Dalio says will drive huge and unimaginable changes over the next 5 years. Or in other words, buckle up, because we're speedrunning history on expert mode now. So while Washington bickers about deficits, Dalio's bottom line is clear. Bitcoin's hard cap makes it the only adult in a room full of IOUs. We're bringing back Lee. Dalio says U.S. debt is basically torching confidence in fiat, pushing people into gold and Bitcoin. Do you see this debt spiral as Bitcoin's single biggest adoption driver right now?
Good question. I think it's not necessarily the debt. Obviously, there's a lot of US debt, and it has been kind of like a topic of discussion for quite a few years now. However, I think it's more how people are beginning to see and are beginning to accept Bitcoin as a store of value. If you ask people like few years ago, oh, why would I keep my money in Bitcoin? Because I don't know about the volatility of price. But so is for the stock market, so is for the gold, right? But today, I think if you ask a person, I think they will be like, okay, I'm okay with that volatility because I can see that my purchasing power is basically being eroded in whatever, right, US dollars or any other dollars that you kind of, your country kind of provides in. And I think an average person has a more understanding of that, and hence they understand that, okay, Bitcoin has limited supply, just like gold. So over time, I can actually see its value being preserved rather than being eroded, even if there's short-term volatility.
Yeah, the math certainly adds up. It's too bad we don't actually teach, finances or tax laws or anything in American schools. If we did, this would be happening, I think, a lot faster, but we just live in this bubble of ignorance here in America. I don't understand it. Now, Dalio also downplayed stablecoin risks and instead pointed to treasuries as the real weak link here. Do you agree with that? And does TORRAM's work on Bitcoin DeFi offer safer alternatives for institutions stuck in treasuries?
Yeah, that's a good point. I think it makes sense because a lot of these US like stable coins are currently, if you're backed by US treasuries or if you're backed by US reserves, right? Or fiat, then you inherently include that risk, but you can think of the risk as more diversified in that sense, right? Like if you are backed by US treasuries or backed by fiat, you can be literally also back certain portion of your stablecoin by gold, right? Or Bitcoin itself, right? And I think that's something maybe some of the key stablecoins in the industry will look into to doing that to de-risk themselves. As far as TORRAM, we are more infrastructure that enables, let's say, stablecoins to be native to Bitcoin. We don't necessarily kind of work with risk management or anything of that sort. So for us, it's mostly like, okay, you can bring your stablecoin native to Bitcoin. So that could lead to a solution where, okay, now stablecoins are able to back their reserves with a certain percentage of Bitcoin, which inherently you could only do it in a custodial way, but TORRAM could potentially offer a non-custodial way to make that happen in the future.
Gotcha. And this next question I have for you, Lee, I think you'll be a really good person to answer because Dalio calls Bitcoin hard money because of its 21 million cap, right? And you, as someone who spent years working on Ethereum, Filecoin, and now Bitcoin, does Bitcoin's fixed supply give it kind of like a unique credibility other chains can just never match?
Yeah, I think there's some truth to it. I think that makes sense. Why is gold, more valued than other, like iron or aluminum, right? Because it's difficult to mine. It has limited supply, right? It's hard to kind of produce. Limited supply gives that, but it's not only the limited supply, but also is decentralization nature, right? I mean, you can think of certain chains like Ethereum, there's this core devs, Solana, there are these folks or whatnot, right? But who actually owns Bitcoin? You, me, everybody. Who controls Bitcoin? You, me, everybody. There's not a fixed group of people that you can necessarily go after and say, hey, shut it down, right? And I think that's decentralization nature of it, that nobody controls it, nobody owns it. Even government entities don't control or have influence over. Nobody can go and say, hey, you know what? Let's just change it to 30 million tomorrow. I think that's what makes it more hard money rather than this limited supply. It's complete decentralization and the fact that we all control it, but nobody controls it.
Right, absolutely. And makes it certainly a little, people say gold is like hard cap, but they're mining like, I think 1% to 2% of the gold supply like every year is new. So to me, that's kind of like, that sounds a lot like inflation, especially if we ever get one of those meteors that has like $4 trillion worth of gold, and gold prices are going to absolutely crater. But I don't think we're there just yet. But I do want to talk more about gold, so stay tuned, Lee. We're going to bring it back in just a second because gold just hit another record high itself, and Bitcoin is well right behind it, breathing down its shiny little neck. Assets under management for gold ETFs are sitting at about $180 billion. Bitcoin ETFs already closing in at $160 billion. Not too bad for a market that's barely old enough to rent a car, while gold's been flexing since ancient Egypt. Gold's big advantage, well, the central banks. They scooped up over 1,000 metric tons last year, triple their usual average. How much Bitcoin did they buy? Zero. Because central bankers would rather buy more paper debt than admit the internet made better money than they did. Meanwhile, Bitcoin ETFs are the new hot ticket. Louis Laval at Frontier Investments said ETFs legitimized it for many investors, which is finance speak for suddenly all the same guys who called Bitcoin a scam are now collecting management fees off of it. Gold futures are up 36% this year, sitting at almost $3,600 an ounce. Bitcoin is up 18.5% year to date, trading around 110 currently after peaking as high as 124K earlier last month. Gold may have more history here, but Bitcoin keeps proving it doesn't need 1,000 years to move the needle, just a few good bull runs and a Twitter account. Critics love to say that gold has centuries of crisis performance, which is true. It survived plagues, wars, and depressions. But all that history still doesn't change the fact that you can't email a gold bar. Bitcoin, on the other hand, has only been around for about 15 years and has already gone toe-to-toe with central banks, regulators, and Kim Kardashian's crypto endorsements. Gold's relentless bull market is apparently running on stealth mode. U.S. investors aren't piling in. August saw new U.S. gold demand drop 14.3% from July and 27.4% from the 12-month average. Or in other words, Americans would rather buy Apple stock or another iPhone than a lump of metal that just sits there. Asia's still buying gold like it's going out of style, but Western investors, not so much. Which is ironic because U.S. policy under Trump is helping drive gold demand abroad, even while he's simultaneously setting up a Bitcoin strategic reserve here at home. Only in 2025 do you get a president moonlighting both sides of the market at the same time. So what's the better play? Well, analysts like Juan Leon at Bitwise says it isn't Bitcoin or gold, it's probably both. Gold is stable. Bitcoin is explosive. Gold is the Volvo. Bitcoin is the Tesla with rocket boosters and questionable autopilot. Both are moving off the same thesis. Nobody trusts sovereign debt anymore. The difference is one asset is literally ancient history. The other is the future, and it's catching up and fast. We're bringing Lee back. Lee, Bitcoin ETFs are already at $160 billion AUM, nearly catching gold's $180 billion. What does that say to you about Bitcoin's speed of adoption compared to an asset that's been trusted since pharaohs were a thing?
Yeah, so I think like you got to look at the timeline of this adoption, right? The ETFs were launched just a few years ago, and I think you said it, gold has been there since, Bronze Age, Coin Age, like thousands, I don't even know how many few hundreds of years ago. Right. But also you have to think how long the internet has been there. Not that long ago in human history. Right. And if you look at that context, that if internet has not been there so long ago, right, and Bitcoin has taken quite a bit of chunk of the time in adoption. And Bitcoin is it's internet's goal, right? It's much more easier to carry. It's much more easier to, pass it over in your will or inheritance, easier to manage. Like I can't really have 10 gold bars lying around. I do have to trust the custodian. And that's where kind of Bitcoin shines, right? And I think it's just a matter of time where Bitcoin can definitely be a strong competitor to gold. But gold is definitely not going anywhere because it also comes with tradition, history, and some folks across, will always like gold. But I think Bitcoin is definitely going to give a healthy competition to gold markets. And it already has.
Yeah, but with that being said, critics always say gold has centuries of crisis performance, while Bitcoin only has 15 years. So do you think Bitcoin's short but chaotic history, we're talking about surviving bans, crashes, celebrity endorsements, actually proves resilience faster than gold ever did? And a big part of that's probably because of the internet, right?
Yes, it does. And I think that's a really good point you bring up. You got to think of like as a cockroach, right? You can't really, it's so hard to kill a cockroach, right? And Bitcoin has survived so many of these bottlenecks, right? Many currencies throughout history has gone through the same. And that kind of tells it that Bitcoin is truly a winner, right? Even few years ago, you would not even think about Bitcoin being comparable to gold. It was like some scam coin that people were using for nefarious activities. But today you can see that countries are thinking about putting it on their balance sheet. In 15 years or I think that's a one heck of a run up and change in reputation, if you will, for an asset class.
Yeah, it kind of seems like because of the internet and how much faster things and information and ideas move today, it feels like Bitcoin kind of got all of gold's crash course and perseverance in a much shorter time window. It reminds me, if you ever saw the early Adam Sandler movie, Billy Madison, he goes back to high school and he has to do all of school from kindergarten through high school in 2 weeks' time to prove that he's battle tested enough to take over his dad's company. That's kind of been Bitcoin's journey, I feel like, akin to gold, but just compressed because it's had so many more challenges due to the fact that the internet and information is able to spread more quickly than ever. So it's interesting to see how this is all working out. It feels battle tested, like you said. I would concur.
Yeah, absolutely.
For sure.
And I think internet and the information across the internet makes markets more efficient in a faster way. And I think that's what happened to Bitcoin, right? With a lot of information in a quick amount of time, markets are just picking the winner.
Yeah, and you know, conversations that used to take hundreds of years to spread globally are happening in mere minutes. So you have plenty of detractors, but then you have people being like, well, there's this, answering those detractors in almost real time. So, you know, that's why it's no big surprise this thing is moving so much faster than I think we probably ever could have anticipated, at least compared to gold. So good stuff on the horizon for us. All right, Lee, it's time for our deep dive. Let's run the stinger, guys, and get on into it. All right, Lee, it's time for our deep dive. We're going to get a little bit of a better picture of you and TORRAM and everything you and the guys over there are up to. We got a little bit about your background earlier. You have been in the space for now over a decade. You've worn a lot of hats. Now you're at TORRAM. TORRAM's tagline is basically, make Bitcoin great again. Give me the short version. What does TORRAM actually do for people who still think Bitcoin can't do anything except sit in cold storage?
Yeah, sure. To give some context, right? So a lot of innovation in the Bitcoin space has been derived from Ethereum, right? In the sense that, you know, people saw how things are done in Ethereum world, you know, a lot of modular infrastructure fragmented, right? You know, you have like execution layer here, consensus here, you know, data availability here, and that's what they brought to Bitcoin, right? But we believe that that's not the right way to build on Bitcoin. Why? Because Bitcoin is a monolithic chain by its nature. It's a whole, right? And that's what TORRAM brings to Bitcoin, a monolithic solution to Bitcoin network. So we are the only fully unfragmented infrastructure built on top of Bitcoin. We're a proof of stake network on top of Bitcoin that solves all the problems that you need to build institutional applications like stablecoins, real world assets, collateral lending and borrowing on top of Bitcoin as natively as you can.
Very good, very good. And I was reading about you before we had you on the show. I got to do my due diligences before I have you on. And I read that you've said TORRAM cures Bitcoin's limitations and amplifies its strengths. Can you unpack that a little bit for me? Like, what do you mean by that?
Sure. So what are Bitcoin's strengths, right? Complete decentralization, right? Its security model, and also any type of assets that can live on Bitcoin, right? Which is, you know, taproot assets or any type of different types of assets, right? What are its limitations? It does not have an account model like a smart contracts. You can't really do complex logics, right? So smart contracts are what allows you to do complex applications like stable coins, pooling together, DEXs, right? And also it does not have an oracle. So without off-chain data, right? How do you do liquidations? How do you do staking amounts? Without an oracle, smart contracts are basically like a computer without an internet. So TORRAM brings the oracle network in a decentralized manner and also brings smart contracts to Bitcoin while keeping its strengths, right? We have developed a new type of asset standard that lives natively on Bitcoin, right? And as well as the same, you know, you get the, I would say, other strengths from what a blockchain basically needs to build these kind of applications.
Got it. And how would you say that TORRAM's approach differs from Bitcoin layer 2s and side chains out there like Stacks or Rootstock? Like, why stay native to Bitcoin L1?
Right. So if I ask you, like, let me build an application for you on Ethereum, but you're going to get your tokens in Solana. Does that make sense to you? You know, I'll tell you that, hey, you are a user in Solana, but here is some ERC20 token for you. It doesn't make sense, right? Or what if I tell you that, okay, you know what, you are a DeFi user in Ethereum, but you know what, I liquidated you at 100K, but you know that price is actually stored in Binance Chain. You'll be like, dude, why are you liquidating me on Binance Chain's price, right? And that's how the current limitations of these Bitcoin L2s or other ecosystems. You know, you get liquidated. You are using an oracle from different network. You do not have the assets on your chain. So that's why living on Bitcoin L1 is important, right? Because now you have an application where you own the assets on the Bitcoin L1. It is not an ERC20 token. It is not a Solana token. It's indeed a Bitcoin native asset, right? And if I'm going to liquidate you for 100K, your data is stored in Bitcoin network. It's not something I'm pulling from Ethereum or other networks or other side chains. It's indeed stored in Bitcoin, and that's why it's important.
Gotcha. And for the non-technical crowd out there, for my mother, for instance, she watches the show. Surprise, surprise. Can you explain how TORRAM goes about managing programmability on Bitcoin without like breaking Bitcoin's core design?
Yeah, so like I mentioned, we are proof of stake network on top of Bitcoin, and we have introduced like a virtual machine that introduced smart contract capabilities. Nothing fancy, nothing crazy. It's just standard smart contract that allows account-based model that allows you to kind of do more because Bitcoin inherently is a scripting language, right? It's very limited. The best way to think about maybe, is that Bitcoin is a big safe, right? But in order to do smart contract, you need little safes inside the big safes. So we basically allow that to happen.
Gotcha.
Hope I didn't kind of lose you there.
No, I'm sure my mom is fine. She got it. I noticed that you guys at TORRAM have put up a bounty with millions in tokens for builders. What kind of projects are you hoping to see come out of that, and which ones do you not want besides like another dog coin? I think we've had enough of those.
Yes. I think dog coins is not what we want at all. When we started building this, I still love the space when I started. And back in 2017, we were technologists, who came into the space, and we wanted to, change how financial things work. And over the years, that's what you get for open and free markets. You got a lot of dog coins, and our thesis had been that we do not really want dog coins. And a lot of the applications that are currently in our network are mostly stable coins, real world asset applications, collateral lending and borrowing, and that's it. No meme coin and funny business. Nothing wrong with it, but it's not something that we're advocating for.
Sounds good.
I know there's a lot of
coins.
hate I'm gonna get for it. Yes.
Okay, so let's say, what is your vision of like TORRAM succeeding? What would be the end game? Is it Bitcoin being the backbone of global finance, or just proving that yes, you can in fact build cool things without leaving Bitcoin's house?
I think both. You nailed it correctly. Bitcoin being the institutional finance house. The way we see it is that every chain is finding their use cases, right? So right now you can see, the top three contenders, right? Solana, Ethereum, Bitcoin, right? With Ethereum, it has always been the general chain where people can build cool things, a lot of different experimental kind of things. With Solana's TPS, we saw a lot of casino type applications or a lot of meme coin stuff. And, they have also tried to do a lot of institutional kind of focus stuff, which is, great. But I think from a retail perspective, Solana is definitely the favorite in that, right? We think that institutional finance will mostly live on Bitcoin and not in other chains. And there are certain reasons for it, right? Bitcoin is slow, right? It has 10-minute block times. Fees will be super expensive in the future. And you don't necessarily need to do everything that's been done on other chains on Bitcoin. You need to use the strengths of Bitcoin to do what needs to be done the best way possible. And we think that institutional use cases are what Bitcoin was ever built for. And, many people don't think that, but we think that institutional use cases are what Bitcoin will live on. And you have other chains to do all kind of fun stuff you need to do.
Yeah, absolutely. And right now, at TORRAM, what is something are you excited about? That's something that you're building. Is there anything you can tell us about what maybe is on the horizon without giving too much away?
Sure. We are working on something really interesting that the Bitcoin ecosystem and overall the entire crypto ecosystem will see. Can't speak much about it, but we are looking for native yield generation opportunities for, let's say, institutionals, let's say, for example, like Bitcoin corporate treasury companies who hold like a lot of Bitcoin, right, in their balance sheet, or maybe the Fed, right? For those, we are looking at yield generation opportunities natively as you can through our network. But I'll kind of have to stop there.
Fair enough, fair enough. And really quick, if people in our audience, you pique their interest, they're curious about TORRAM, is there a good place, or what's the best place they can go to get more info on what you guys are doing over there if they wanted to learn more?
Yeah, I mean, you can follow us on Twitter, DM us on Twitter. There's also we have a Telegram group. You can join the Telegram group, and our community specialist will basically kind of guide you from there.
Amazing, amazing. Well, I want to shift gears a little bit here with our last couple of minutes, Lee. I want to talk kind of about what's happening in the Bitcoin space right now, because I love getting the opinions of different people in different aspects or arenas of the Bitcoin ecosystem. You know, like for instance, right now, we're in the quote unquote bull run that, you know, we're thinking. And what comes after the bull run, of course, is the bear run given the halving cycles. In your opinion, from your seat at the table, do you feel like the halving cycles are going to be continuing in the same way that we've seen them? Are we still going to get this bull market followed by a big correction? Or do you feel like with all of this institutional inflow that we've been seeing recently, the halving cycles of the past are not going to be the same as we had seen back, as we had seen previously? Or the future, I should say, are not going to be the same as what we've seen in the past?
Right. Hank, I wish I have known, but you never know for sure. But what I'm seeing is probably more stabilization in the market, right? And if you think about it,
right,
we were just around 60K last year, and right now we have doubled. We can't be doubling every year, so there will be at some point some form of correction and stabilization. But I think the game has definitely changed, and I think the two trigger points are definitely clarity on the regulation side of things, and the second is the institutional flow. We didn't expect that it would happen so fast. We didn't expect, like when we were building TORRAM last year, we were thinking like, this is something we'll see in the next cycle, which is 3 to 4 years from now. But it happens so quickly, and we were well positioned to serve this market. But we were initially thinking that this won't happen until the next cycle. So you never know in that sense. But at the same time, I think the market structure has definitely changed. So perhaps we may not see Bitcoin at 20K, which I don't think most likely we'll see Bitcoin at 20K, but perhaps there will be some minor corrections here and there. And
Yeah, always hard to predict the future, but it does certainly feel like 2025 has sped up the process quite a bit, especially with the government regulations and guardrails that have been put in, especially by the American government this year. And you yourself have lived through a number of these crypto hype cycles since 2017. Is there a narrative going around in 2025 that you think is just kind of nonsense right now based on your own history in the space? Is there anything you're just not buying?
Good question. Yeah, I don't know. I think we already know like the meme coin stuff is obviously seasonal kind of stuff.
Right.
Other than that, I think it might be very difficult to make a case for a lot of new L1s that used to be there. So in the last cycle, we saw a lot of different L1s, but I think what's happening is that a lot of that liquidity will probably flow to Bitcoin, right? If you can do the same stuff in Bitcoin, why will I be on some other chain that's not a top market cap chain? And I might get a lot of hate for this, but something to probably think about, right? I think there'll always be some, bigger chains. That's obviously Ethereum has always been number 2. Solana is obviously favorite for some, but there are a lot of other chains. If you haven't really found the use case specific for it, Bitcoin might just come for you.
Right. And one more thing I want you to think about really quick before we go. We started this new game on the show where we have all of our featured guests give us their prediction for Bitcoin's price by the end of this year. And whoever gets closest, we're sending a Roxom Patagonia to. So we've had just to kind of set the land for you, the lay of the land here, we've had a lot of different bets. I think our highest right now was like 433K. We have some people prices writing it going 200,001K. I think as low as 130. What is your, this is not financial advice, but what is your prediction, all fun, for the end of this year for Bitcoin's price? Because I want to give you that Patagonia, but you got to win it fair and square. So what do you think?
Fair enough, fair enough. I would say, let's say 150K, around 150K seems reasonable to me, Yeah.
150K. Okay,
Yeah.
so we got Lee on the board at 150. Beautiful. So we'll make sure next time we have you on here, we're going to update it. And if you're the winner, we'll make sure to send you that Patagonia. So, Lee, we got to end things now. But before we go, again, if people in our audience were intrigued by you and TORRAM, what's the best place they can go to learn more about TORRAM? And you too, if you have like hot takes on Twitter or something, what's the best place that they can find you?
Yeah, Twitter. I think Twitter is the best place for us. And also through Twitter, you'll see a Telegram community. And these are the best two things that you can reach us through.
Great. What was the Twitter handle they should go to?
Let me see. It should be TORRAM XYZ.
TORRAM XYZ.
Let me confirm. Yeah, TORRAM.xyz.
Perfect. All right. Well, Lee, thank you so much for your time today. It was such a pleasure getting to pick your brain and getting your insights and expertise on the space. We really appreciated having you on the show today. And I hope to chat with you really soon, hopefully to find your address where I can send you that Patagonia.
Thank you, Hank. It was a pleasure chatting with you, and it was lovely to be on the show. Thank you again for the invite and letting me share my thoughts and opinions. It was a pleasure being here, Hank.
Oh. Pleasure was all ours. Thank you so much, Lee, and we'll talk to you again really soon, bud. And we will be right back with more Blockchain Report right after this, so stay tuned as we wrap things up with a little bullish, bearish, or BS. We'll be right back.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
All right, it's that time for Bullish, Bearish, or BS, where we wrap up today's show with our top stories. We'll recap them and decide if things are looking good, bad, or just a bunch of BS for Bitcoin. Let's do it. First up, September has historically been Bitcoin's worst month, averaging almost negative 4% returns across the last 12 years. From China bans to Terra collapses, this time of year has been an absolute graveyard for portfolios. But with Jerome Powell hinting at rate cuts and ETFs sucking up supply, the curse may finally be broken. I am bullish on that. I mean, if liquidity loosens and ETF demand keeps climbing, Bitcoin could flip the worst month into a springboard for another run into October, baby. So I'm bullish. Next up, we have RAJ Properties. A billion-dollar developer will now accept Bitcoin, ETH, and stablecoins for luxury real estate in the UAE. The move makes crypto a legitimate medium for high-ticket deals, not just Lambos and meme tokens, as fun as those are. It's also part of the UAE's push to become a global crypto hub. I mean, come on, you gotta be bullish about this. Every real-world use case strengthens Bitcoin's credibility. And if luxury real estate buyers are transacting in BTC, that drives adoption and reinforces Bitcoin's long-term store of value narrative. So yeah, Bitcoin buying homes equals mainstream adoption, which equals bullish for you and me, baby. Last but not least, we got 2 bullish, 0 bearish, 0 BS. Let's go for the clean sweep. We have gold ETFs currently manage around $180 billion, but Bitcoin ETFs have already hit $160 billion after only 18 months on the market. Institutional money is flooding on in, and Bitcoin is starting to steal the spotlight from the world's oldest safe haven. Gold's bragging rights date back centuries, but Bitcoin is catching up and fast. So my verdict on this, of course, is bullish. I mean, think about it. Institutional demand through ETFs creates constant buy pressure. If Bitcoin keeps closing the gap with gold, the path to new all-time highs looks inevitable. So today, our final diagnosis, we have 3 bullish, 0 bearish, 0 BS, which means today is a clean sweep bullish, baby. I mean, here's the big picture. The historical boogeyman of September may finally be out of gas thanks to rate cuts and ETF inflows. Bitcoin is proving real-world utility by buying actual property, not just speculative hype. And institutional adoption is exploding as ETFs put Bitcoin neck and neck with gold. So you put that all together, and the setup is as bullish as it gets for both the short and long-term, baby. Me and Flava are excited, and you should be too. Well, that is a wrap for today's show, boys and girls. Thank you, as always, for tuning into the Blockchain Report. Remember, we are on 5 days a week, Monday through Friday. Mondays, we're on at 10 a.m. so you can watch your football and stay up late and still catch us while getting your beauty sleep. But Tuesdays through Fridays, we're on 8 a.m. Pacific time to 10 a.m. with all of the crypto chaos and Bitcoin bedlam that you have come to expect. And we're here to bring it to you. So as always, thank you for watching. If you haven't already, make sure to like, follow, and subscribe to RoxomTV. And if you want, you can do it to me too. Yours truly at Hank at RoxomTV on your platform of choice. And I will see you all tomorrow to wrap up this week. Until then, stay safe, and as always, hodl on.
security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy. Bitcoin, I need you. Don't go.